Welcome back, ladies and gentlemen. It's Benedict back here again, and I want us now to talk about our opening entry. And when I talk about opening entry, we mean when a business starts the books of a new year, it has to make what is known as the opening entry in the journal. So the opening entry here, we are talking about journal. We are not talking about the ledger accounts. And of course, there are also the opening entries for ledger accounts, but we are still talking about journals. So we are saying when the business starts the books of a new year, it has to make what is known as opening entry. Okay. So opening entry, simply put, we are just making entries of the previous year's balances as opening balances in the current year. So we are saying that the journal here is meant for recording the various ledger accounts that are being transferred from the books of the previous year to the books of the new year. So the new year will be the current year. So the balances of the previous year of various accounts will record them in a journal, and then we'll be calling that the opening entry. So there will be opening balances of the previous year we are recording in a journal for this year. And then we're also saying all accounts that will show the business owns assets, or rather all accounts that will show what the business owns are debited, and all accounts showing what the business is owing are credited. The capital account will also be credited. Okay, and then remember, capital account is equal to assets minus liabilities. If you can remember the accounting equation. So we are being told that all accounts that show what the business owns are debited, and all accounts showing what business is owing are credited. So in simple language, we are saying we'll debit assets and we'll credit liabilities. So here is the element of expenses is not here, because when you are trading at the end of a period, we'll be having profit and loss account. So we said that profit and loss account shows the financial performance of a business, and the financial performance of a business will show whether you've made a loss or a profit. When it is a profit or a loss, when it is being carried forward to the next year or the next period, it will go to equity. So we'll be talking about the retained earnings and not the profit and loss balances. So the profit and loss, the net balances with the profit and or loss will be carried forward as retained earnings. So the retained earnings will form part of equity. Remember here the capital here is also part of equity. So we are saying again equity, rather capital plus retained earnings is equal to assets minus liabilities. So that's why we are not talking about expenses being debited anywhere when you are doing the opening entry. So down here we have a sample of an opening entry. So here we have date, we have particulars, we have just a normal journal format of which we have debit and credit side. And then here now we are seeing that I think I did not mention the dates here correctly, but forget about the dates. But let's assume that we are making entries, and the opening entries will always come at the first of the accounting period, or rather the financial year. So if our financial year starts from January to December, meaning the opening entries should be entered on the first day of the accounting period. So it will end on the 1st January 2022. So this was just an oversight. These 3, 4 just an oversight. So so what here we are saying that we had an opening balances of assets. The assets here we have cash, we have bank. So these two are current assets, and then you also have sundry data. This one is also a current asset. We also have stock, which is a current asset, and then we have these other two, which are fixed assets. So we have assets both fixed and current. My cash account was 5,000, and then bank account was 15,000, and then sundry creditors was 45,000, with the stock account being 45 also. And then we had furniture account having 20,000 and equipment having 15,000. So liabilities here we have 25,000. Okay. So supposing we did not know the capital amount, what we'll do, we'll say capital or equity is equal to assets minus liability. So we'll add the total assets here, and then we less our liabilities, and then we'll know the capital account is having 120,000 as a balance, or rather as an opening balance at the beginning of the accounting period. So that's how to work with the opening entry. Yes, you're supposed to understand that when you are trading at the beginning of the next period, you must make entries of opening balances before you continue with your trade. So there must be opening balances from the previous balances of the accounting period. So ladies and gentlemen, I hope you understood what we mean by opening entry. And again, now we'll stop at that, and then just to do a small recap here, we are saying when a business starts the books of a new year, it has to make what is known as opening entry in the journal. So that's the meaning of what we mean by opening entry, and it has to be done in each and every accounting period. So thanks a lot for watching, and let's meet again on the next video. So our next video will be working on ledger and the ledger account. So there'll be so much to enjoy with the ledger and ledger account. So let's meet on the next video.